calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Firstly, this video is an excerpt from my mega analysis that concludes in a detailed stock market trend forecast into the end of 2023 that was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. Lock it in now as it's set to rise shortly after the new year to $5 per month. Stock market and margin debt analysis. Margin debt tends to peak and fall long before the stock market turns lower, as basically speculators start to feel the pain of holding losing positions and thus cut back on their bets. Either that or are forced to close their losing positions due to failure to meet margin calls, as investors in Tesla are experiencing right now. What do you think is driving Tesla stock price lower and lower? Margin calls, forced selling. They're forced to close either partially or all of their positions as they're driving the stock lower. So in which respect, this indicator proved very useful in flagging the prospects for a bear market long before it materialized, as stock prices trended higher on petrol fumes as the fuel tank was basically empty during 2021. All those who are still waiting for capitulation are looking for it in the wrong place. Here's your capitulation. Margin debt collapsed to rock bottom as burned investors were kicked out of their FOMO buy the dip leveraged positions. September data which will likely show a new low in margin debt. Yes, falling margin is bearish for stock prices. However, this trend is primed for reversal. As we saw during August, it does not take much expansion in margin debt to feed the bull market. The observed pattern is that margin debt falls before the indices peak and bottom with the indices. This is because those investing on the basis of margin tend to gamble in higher risk, more volatile stocks that tend to start their descent long before the major stocks in the indices, whilst bottoms tend to occur with the margin debt lows. The current low is indicative of a degree to which this bear market has wiped out leveraged investors. So once more, heed my warning. Never invest using leverage. For one, cannot invest and forget when using leverage, because you have to service the margin debt with interest, and then if stock prices fall, if the drawdown is deep enough, you're going to get kicked out of your position. You're going to get margin called. Investing is hard enough as it is. Why are you going to complicate it with margin? They focus on the upside. 2x, 3x, 4x for the same amount of money, whilst completely being blind to the exponentially greater risk. This exponentially, you can't put your holdings away in the box called invest and forget, which is where high, small cap growth stocks should be, because they are extremely volatile. As you look at any of them, even the good ones, there's literally of good ones that have gone up and down like yo-yo this year. But you can't invest and forget. So heed this warning. Never invest on margin, ever. the industry right now is just enticing people to take on margin. Well, for the past few years, encouraging it. Oh, look, Robin Hood and the like, encouraging people to lose all their money, because that's what happens at the end. You get a paper profit climb, but then you're going to end up giving it all back and more. You will get wiped out if you use margin. Don't matter. You don't think you're cleverer than what you are, because you're not. Heed my warning. Never invest on the basis of leverage. You're not clever. I don't, and I've been investing for over 35 years. Trading and investing. I do not invest on margin. So what makes you think you're more clever than me? Yeah, you're going to have a paper profit during a bull run. Then you're going to give it all back and more, as those using leverage on the likes of Tesla experiencing right now. They have been wiped out. What I've been doing, I've been accumulating Tesla. I knew it would fall below 130. In fact, I had a target of 120 that I set a year ago for Tesla. Yeah, taking into account the stock split. My target for Tesla was 120, and I've iterated this to patrons countless times. I expect Tesla to fall below 130. No matter where you buy Tesla above 130, you have to be prepared for it to trade to sub 130, where my target was 120. Obviously, I wasn't expecting it to get there now. I thought sometime during Q1 of 2023, but still. Anyway, cutting a long story short, do not invest on leverage. And this video is merely an excerpt from my extensive analysis, truly extensive analysis. It's mega analysis, even from my standards. It's a mega piece that concludes in a detailed stock market trend forecast into the end of next year, end of 2023. A detailed trend forecast that tries to map out the trend for the Dow into the end of 2023. That's why I needed to do the extent of the analysis I had to, because to settle on a high probability trend forecast, and which was first made available to patrons who support my work. So for immediate first access to all of my analysis trend forecast, then do consider becoming a patron by supporting my work for just $4 per month. That's nothing. $4 per month, that is nothing. And my forthcoming, you get access to all of my recent analysis apart from this mega piece, and the schedule of analysis includes US house prices trend forecast. That would be 3-year trend forecast. I already released a preliminary forecast, so I had to hit the pause button on that to focus on the stock market, but I've done 80%, so I've got a rough idea where it's going. I just need to finish it and fine tune it. That would be my next piece, mega piece. And then there's regular analysis, updates on the state of the stock market portfolio. Then there's the global housing market. I'm going to do that about halfway done. Then we'll look at the detailed look at the British pound and US dollar, even though it is included in this analysis. I have done analysis of the dollar, which is important. And then I'll update the high risk stocks portfolio. There's 2 of them. There's the mid 2021 and the February 2022 portfolios. And I'll have a look at the crypto market. Is there any sign of life there? Is it falling enough? I remember when I did the analysis last year, I was looking for around 83% drop in the Bitcoin price. Has it fallen by 83%? The high was around 70,000, so I don't think it's got there quite yet. And then I'll have a look at gold and silver, though it's not top of my list. And for Christmas, a special how to get rich. This is not some garbage. This is step-by-step guide of what you need to do. There's no easy way to get rich, but I'll do my best to teach you how to get rich. Hardcore, no waffle, direct points, step by step how to get rich. That will be posted during Christmas. That's a mega piece. That's what I'll probably update that annually, as I add more stuff to it, because step by step guide. So For all of that, do consider becoming a patron by supporting my work for just $4 per month to get immediate access to all of my analysis and trend forecasts. $4 per month is nothing. And do remember to subscribe to this YouTube video for new videos. Gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market. We ride the quantum AI megatrend into the future.